Hey, Assalamualaikum warahmatullahi wabarakatuh. Thank you again, everybody. This is our third or fourth meeting already. As promised, for this week, we will be discussing, or rather, I will be sharing with you on some of the features of the Bursa Marketplace and also to continue the discussions on the calculation parts of risk. Okay, and as we mentioned, I'm buying sometimes for your friends to join. Okay, as we mentioned earlier, for the same slide on the return and risk, the first part is to be covered last week together with the examples and the exercises. And this week you are supposed to look into the calculations of the risk. Okay, so let's wait for more to join us. Okay, all right. Okay, we have 44 students so far joining. All right. So I suppose we will begin with the discussions on the risk part, and later we will move on to the Bursa Marketplace. Okay, so that we will not disturb our teaching plan for this semester. Right. So let me share the screen with you on the PowerPoints. Right. Hold on. All right. So I expect that you guys have been looking into the calculations of return in the past week, perhaps. Um, and again, I will need you to try all the calculations first, of course, by looking into the examples, or else you will not be able to do it. And then once you get the how basically on the calculation techniques on the return, then only you supposed to move into the part of risk. Here we go in discussions of risk. So let me start again. And I hope you can stay with me. The calculation of risk is normally slight, or rather, should I say, slightly difficult as compared to return. However, whenever we talk about the calculations of risk and return, especially when we talk about the investment, you must also understand that risk cannot be calculated until you come out with a certain benchmark of a return. In a way, risk can only be calculated if you know what will be the return. Now, how do these things works? Okay, you might be wonder. Okay, as I mentioned here, risk must be measured together with return. So that's why in the past week we were basically calculating and establishing a particular figure, a particular value of return. Why? Because with this return, then only we will know what will be the risk. But why is this thing? What make risk can only be calculated after we establish return? Now, how do we define risk is very important here. Perhaps in your life you have a different definitions of risk, but when we take it into the view of investment, into the view of finance, then risk will be the uncertainty over a certain benchmark return. What does it mean, sir? Now, if I can give you an analogy here, first of all, let's consider if you are an ice cream seller. Okay, so you have been selling ice cream for the past 3 months. Since January, let's say January, February, and then March. So you are an ice cream seller. In January, you calculated your return in January. Let's say your net profit here is of course your return. Net profit in January will be 1,000 ringgit. Okay, so I'm using a simple value so that it will be easier for me to calculate later on. So in January, it is 1,000 ringgit. In February, it turns out that your return is 500 ringgit. Your net profit it is 500 ringgit. And in March, okay, let's assume that we already at the end of the March, you managed to find out that your net profit will be 1,500 ringgit. So January 1,000, February 500, and then in um, much 1500. Now, if we will have to calculate this using the techniques that we learned in the past, most likely we are going to use the technique we call as a historical return using perhaps arithmetic mean. Remember arithmetic mean? All right, arithmetic mean. So arithmetically, are going to find the value of this tree and then divide by 3. So 1000 plus 500 plus 1500 will be 3000 divided by 3, which also means that your average return will be 1000. Now, that 1000 is very important here. In order to measure the risk, we will have to consider, okay, now we know we set 1000 as our benchmark. Why? Because from the past, we can see that on average, the return that the company, the net profit that the company will get will be 1000. Okay, save that inside your brain. Okay, inside your mind, 1000. All right, now, as we get into April, okay, let's say as you get into April, does it mean that you are going to get, will certainly get a profit of 1000? No. Okay, it could happen to be that in April somehow, for whatever reason, maybe because it is going to be a rainy season. Now, your profit in April is only, let's say, $800. And then come to May, your profit, because it is yeah, April is also for Ramadan, so Ramadan slightly lesser profit. So April, your net profit is only 800 ringgit. Come to May, Raya, perhaps Idul Fitri, perhaps your sales is increasing again. So in May, your profit is 1200. Now, where is the element of risk here? The risk is the differences between what you expect, and what you expect here is, of course, your benchmark return. Is, of course, your average return that you calculated earlier. So that is your benchmark, 1000. Right. So in April, you get it as 800, slightly lower, right? So when it is slightly lower here in this context, the differences, the deviation between what you expect and what you actually get will be considered as the risk. The size of the risk will be determined by finding the differences, or in the mathematical words, the deviation between what you expect to get and what you actually get. Okay, so as it turns out, in April later, you will have a negative. You will find it to be negative because your actual return later will be lesser than your uh, apa nama, expected or historical return. But in May, it is 1200. It is higher than what you expect. It is still considered as risk. That's why it is very important to understand that risk is not necessarily going to be a negative. Risk means there is a deviation or some fluctuation from what you expect. So if you expect it to be 1000, as it turns out, it will be 1200 or 1500. It is a positive kind of risk because it is higher than what you expect. But of course, we are living in a world where only Allah knows everything. So there is always a chances that if you can, let's say, have a deviation higher than your expected return, then you can always also have a chances of getting, this is what the chances here, uncertainty or risk here, chances or risk of it going to be slightly below than what you expect. Okay, but having said that, it is also very important to understand the term risk here. It is the uncertainty over a return, the return that you have set out. Right? So I hope you get that into your mind, because later, perhaps if you, some of you have already tried to view the past exercises, or past, no exercises, past tests or past final exam uh, that I prepared, then you will realize that I have these kinds of tendency to keep on pushing you to understand the concept. You will be able to do the calculation, but suddenly your calculation will be worthless, or you will not get full mark. You will lose but 5 marks, 10 marks, maybe, because simply you do not understand the concept. I try to somehow get you confused over the conceptual parts. Okay, that will be some of my perhaps, yeah, things that makes me the one of the lecturers in the department. Okay, that made me special. Perhaps if I can say so. Not the special one, but one of the special. Okay, right. So those are the definitions of risk. So you do not have to associate, put it inside your mind, come up with a perception that risk will always be a negative, because it is not like that. there is always chances of risk going to be a positive. It is simply that you do not know what will happen in the future. And this is as human, we will always do not know. Only Allah knows, right? So we will take the risk if we believe that the risk here is worth more than the return that we can get is worth more than the risk, something like that. Okay, let's get into the calculation. All right. Before that. So now, as we will discuss the risk here, we should also have a look again conceptually into the different types of risk, especially from the investment perspective. Okay, you don't talk about risk of your life discussing with unsystematic and systematic risk, slightly different. But at least from the market view or from the financial view, investment view, then you must be able to categorize these two things. First, unsystematic risk. Okay, the other one will be systematic risk. Let us discuss unsystematic risk first because this is what we are going to calculate afterwards. Okay, unsystematic risk, the criteria of unsystematic risk is that it is the uncertainty over the issuer of the asset. Let's say you are purchasing a particular stock. Okay, so that stock here is being issued by a certain firm. So anything related to the firm. Okay, let's say let me give a name here. Let's say you purchase Nestle, stock of Nestle. Okay, so anything that happened to Nestle, their dividend announcement, the changes of shareholders perhaps, they are in the case they are issuing stock splits or rights, or if they are going to embark on a mergers and acquisition, or if they are going to issue new products, anything related to Nestle will be considered as your unsystematic risk. Why? Because you buy Nestle, because you acquire this Nestle stock. So you buy Nestle, you are very much attached to any risk related to Nestle, and we call this as unsystematic risk. Now, we call this as unsystematic risk. The word unsystematic here because we believe it can be eliminated with a good portfolio. Eliminated in the sense that you can reduce the risk to a number of zero. Perhaps in real world it is too good to be true, but theoretically, academically, it can happen, right? So it serves as a guideline, as a benchmark for us. To have a good portfolio, we will try our best to get it near to zero. Right? We will try we must strive to ensure that our risk will be quite will be very close to zero. But how do we do that? Now, the simplest way, at least when we want to discuss it, is very simple, of course. It is not difficult because to eliminate these kinds of unsystematic risks, to eliminate the risk related to Nestle just now, or internal risk related to Nestle, what you will have to do is simply to take some portions of your investment in Nestle and invest in some other places in what we call as a portfolio. That's why later we will learn into the chapters of portfolio. Right now, remember, we are still discussing on single asset. But theoretically, if you want to have more profit, if you want to reduce your risk here, and but still maintain good profit, then the best technique is to come out with a collections of portfolio, a collection of investment in a portfolio. Do not put all your eggs in the same basket. Do not put all your money into Nestle, because by doing so, you would be affected by any risk related to Nestle. So it is not clever to do that. Better way is actually by controlling the risk and have a good portfolio strategy. All right. So that will be the first part on unsystematic risk. And by the way, unsystematic risk, because we are going to measure the differences between what we expect and what we will get, then the best measurement will be by using sigma, or what we call as a sigma or standard deviation, or sometimes variance. Right. This will be learned afterwards in this particular chapter. The second part of the risk, okay, or what we call as the systematic risk. And this is, you will have to look for systematic risk from a wider perspective here. Okay, systematic risk is anything related to market forces that could affect your investment. And regardless of how many investments you would have, you would still be affected. For example, let's say you want to avoid your unsystematic risk, so you build up a portfolio consisting of Nestle, consisting of, let's say, ASB, consisting of ASB, by the way, is a unit trust or mutual fund. Nestle is a stock, and then you also purchase, let's say, stocks from tak mau genting, apa nama, Sime Darby Plantation, for example, because Sime Darby Plantation is from plantation industry. Nestle is, of course, from the consumer product industry. So three different kinds of investment. But remember, by doing this, at best you might be able to reduce your unsystematic risk. But systematically, you will still be affected by any risk related to the market forces. What kind of market forces here? Remember, these are three investments in Malaysia. So market forces here could be anything related to the, for example, the currency exchange rate in Malaysia, or inflation rate, or BLR, or interest rate, or maybe how the government is handling the COVID, or how, let's say, the changes of government, the changes of regulations. These are all considered as market risk. Okay, and market risk here or systematic risk here, in many ways, you will not be able to control or to eliminate it. Okay, control, yes, you can do it a bit, little bit. We can always control and in what we call as a mitigating risk, mitigating systematic risk. Okay, lots of people are discussing this, but to eliminate systematic risk, no way. You cannot control for it. Okay, especially it has been basically um, exposed by academicians that some of you might be thinking, if I can control for the systematic risk, if let's say I invest partly in Malaysia, another portions in Indonesia, another portion in United States, another portion in Japan. Okay, now, good idea, clever. If you can think that way, then it shows that you are having a sound mind and clever. Unfortunately, academicians have proven that the whole market in the world, okay, the global market securities market system is actually having what we call as a linkages. For example, let me give you this idea. If in America, or in fact, remember what happened in the subprime crisis in back in 2007? When subprime crisis happened, it is basically the issue with United States market. But why do Malaysians affected by this American market? Why do Italy and Portugal also affected by the subprime crisis, and Greece as well, and they are yet to recover up until today? What is the relationship between America, Greece, Malaysia, Portugal, or all these countries? Now, if we look into the wider perspective, then we will realize Malaysia and America are having some kinds of can be considered as a good trading partners. They trade, they import and export between them. They have some kinds of agreement and protections. Economically, I'm not so, I do not know what the terms are supposed to be called. Same goes to Malaysia and India. Same goes to Malaysia and China. Same goes to Malaysia and other countries. So we can see that all the global stock market, all the global economies are interrelated. So even if you, let's say, you transfer part of your investment to other countries in order to control for the market risk in Malaysia, then you will see that it is all interrelated and you cannot run from it. Okay, that's the idea of systematic risk, and that's why systematic risk will be put at later chapter once you have basically grasped the concept of unsystematic risk, right? And systematic risk here is, wow, I can say that there is no limit to the discussion of systematic risk. COVID is a systematic risk, can be classified as systematic risk as well. As you know, it has basically changed the whole landscape of the world and the whole way of us looking into investments and looking into the, not only investment, of course, the way that we are practicing our life right now. Okay, so yes, it is the major systematic risk. Okay, so anything related to world politics, economics can be considered under systematic risk. Now the question is, how do we capture this thing into an equation? How do we capture, for example, um, COVID-19 into a particular equation? How do we measure that? Now, later perhaps once you get the idea of systematic risk, some of the students normally, let's say from 100 students, normally one student will decide to do masters and then to embark on a PhD journey perhaps. Then you are those people, selected few, who might be interested to know and later to learn about those equations and those calculation techniques required in order to come up with a certain valuation for this COVID and all other systematic risks. But for the time being, in the class, okay, we will be using the conventional approach. We will be calculating systematic risk, assuming that it will be all reflected by what we call as the beta. Okay, and of course, mathematically also, beta will be the response of the independent variable towards the dependent variable. So fair enough, we can say that beta is the response, or rather, how your company or how your investment will respond to the some market forces here. All right, so that will be it. Okay, so we will look into the calculations of beta later on. For the time being, we will focus on unsystematic risk first. Okay, so far we have 92 students joining us. Oh, if it 95 suddenly. Okay, right? We are supposed to have 120. No. 35 times 4 berapa? 140 actually. That's the reason I'm using YouTube Live rather than Google Meet. Although I prefer to use Google Meet most of the time. But it's okay. We always have to improve ourselves and venture. But of course, at some stage, your improvement is very perhaps slow one by one. All right, it's okay. Now let's discuss first on the calculation technique. Okay. Now, as I mentioned just now, when we talk about the risk calculation and risk measurement, you must first come out with a certain benchmark calculation of return. Right. It is very important here. Okay. So if you calculated the return or the average return or expected return earlier using the certain approach. For example, you use historical return approach, okay, then you must continue the calculation of risk using historical return approach as well. Or rather, using historical return approach. Okay. So if you do the calculations of expected return using the expected approach, then you must measure the risk using the same approach where you will have the probability. Okay, so be careful with that. Okay, so for this one, exercise 4, you might want to refer again to question in exercise 1. Right, in exercise 1, earlier, last week we discussed, all right, the question gave you some information about stock A and stock B. You were asked to calculate the geometric mean and arithmetic mean for both stock A and stock B. And I have since shown you, basically in the slides, the calculation for stock A for both arithmetic mean and geometric mean. Right. So now, between those two, maybe I can go back to the slide for a while. Okay, to bring back your memories. Okay, this one. So this was exercise 1 for stock A, for example. So arithmetic mean for stock A, 4.07, while geometric mean for stock A is 2.63. And remember, I already said, as a rule of the thumb, arithmetic mean will always be higher than geometric mean. Okay, higher. Arithmetic mean higher than geometric mean. So in that sense, people will always be using arithmetic mean in the calculation of risk. Why? Because arithmetic mean is higher. And there are always chances that your geometric mean is so small that it is close to zero. So in that context, it is always better to use arithmetic mean. Okay, it gives you a higher return here, 4.07 as compared to the geometric mean, where geometric mean it is 2.63. Okay, so I hope you get the idea. So we are going to use 4.07 here in the calculation. Okay, right. So this is the calculation for risk using historical return. We are the risk here. Remember, unsystematic risk is represented by the sigma here, or standard deviation here. Sigma or standard deviation. So in order to calculate for sigma or standard deviation I, the formula will be the square root of the summation of all the Ri minus average Ri squared over n. Now, be careful with this formula. Okay, so several things. Let's go one by one. So I show it in the table here. So you will take Ri, and at this level, you must be aware that I already discussed with you what is an Ri. It is the excess return. Okay, So Ri for day 2 here is 20 minus the average return 4.07, and this is to be squared. If you forget to square, you will find out that your answer will surely be 0. Okay, so make sure you square this thing, right? This must be square. And then plus with the second element, 25 minus 4.07 square, you will have the number, plus this one, the third element, negative. So negative 13.33 minus 4.07 square, and it will turns out to be positive, of course. Okay. And then negative 15.38 minus 4.07 square, and this will be the 378.03. Okay, the next step is you are going to plus all these four together. Add all these four together, you will find it will turns out to be 1372.61. Okay, sigma here, 1372.61. You will later have to divide 1372.61 with n. Okay, and let's not forget we have discussed about n last week, and we have, I hope you remember, we agreed to have n equals to the number of rates of return. In the context here, the number of rates of return is four elements. There is four elements. There are four rates of return here. So 1372.61 divided by 4, and the value there, you will have to find the square root of that. The answer will turn out for you as 18.52%. Okay, so what does it mean here? It means that while your return is 4.07, okay, on average, your risk on average is 18.52%. So it is high, sir. Yeah, perhaps you can argue that it is higher than the return, especially. But why? Because some, as you can actually with experience, you will understand this. Even by looking at these kinds of prices, you know that there are huge chances that it will turns out to be uh, high standard deviation, because the movement of the prices here is more than 10%. For example, from 10 ringgit, it moved to 12 ringgit. It is 20%. From 12 ringgit, it goes up again by 25% higher. Okay, the changes, the deviation every day is higher, so it will be reflected in the risk calculation here, or the calculation of standard deviation here. Right. So this is the calculation for the case. In the case, hold on. Okay. Um, I suddenly have some problem. Can you guys still uh, s- do you still have me in the line here right now? Can someone comment if you can still watch the slide? Watch the slide. Yeah, because I'm losing my having some problem with my internet connection, I suppose. Guys, are you still here? Please, someone comment. Okay, okay. Now I receive your comment. Okay, thank you. Let me play with your comment then. Okay, sound selected view. Oh, what's the problem here? Again, I'm not so sure what is happening. Sorry. Suddenly I have these kinds of problem again. Hmm. Okay, let me try this. Okay, alright. I love this thing keeps on happening. Okay, so sorry for the issue here. Okay, let me continue. Okay, if you have any problem, then please let me know. If I did perhaps suddenly realize that you are already here, we have any problem here, then maybe you can try to call me in the WhatsApp perhaps, if I didn't realize there is a problem. I hope no more problem. Okay, let me continue a little bit here. This is the case of exercise 4 when we refer to question in exercise 1 when we were given the price data. Next would be the case on referring to the previous exercise 2. We were given the rates of return. Okay, the difference previously it was the price data. This one is rates of return. The calculation of standard deviation remain the same. Okay, except that the some confusion could be if you still confused between the n, or rather how to find the n. In the context here, n will be 5 because we have 5 rates of return. Okay, right. Next, on the calculations of rates, the calculation of risk by using expected return approach. Okay, in this context, as I mentioned just now, to calculate risk, if you already calculated the return using the expected return approach, then the calculation of risk, you will have to follow this formula. This one is different. Previously, both are under the historical return. The calculation is the same. However, the when you use the expected return approach to calculate or to establish your benchmark return, then in order to calculate for your risk, you will have to include the element of PI here or probability here. So that's the formula will be standard deviation I equals to summations of PI probability times with the RI minus ERI squared. Same approach in the sense that they will find the actual return minus the expected return here. So in the context here, given that probability is zero point 0.2, it will be 0.2 times with 8 minus the expected return here that we have calculated last week, minus 3.4, and then you square this thing, you will have it as 4.23. Okay, so everything here, again, you add all this, 4.23 plus 0.09 plus 35.57 plus 0.768 plus 5.78, right? Divided, sorry, you don't have to divide. Then you will have it as 46.44. Remember, this one you don't have to divide. You just have to find the summation. Okay, you don't have to divide. So all of these will equals to 46.44. Find the square root of 46.44. You will have it as 6.8%. Okay, so that will be it about your risk calculation. So your task for this week is to try to calculate for the investment B risk using the three different approach, or rather the two different approaches. For exercise 4 and 5, use the historical return approach, and for exercise 6, calculate risk using the expected return approach. All right. On one last slide here, okay, this I particularly include this to give you some idea here on the risk return trade off for various types of investment. Now, the reason I include it here is normally because lots of times people keeps on asking me, so how do we understand the terms high risk, high return, low risk, low return? Especially for the students who have been working on the calculations of the return and also the risk. Like you guys, once you do a lot more calculation on risk and return here, you will realize that sometimes higher risk does not correlate with higher return. At least the value. Okay, for example, you find out that between investment A and investment B, the risk for investment A is higher than sorry, how should I mention this thing? Let me try to show you in the slide, additional slide here. Jadi kadang-kadang boleh hilang kata tu dia berguna. No, this one, so the layout, change the layout to okay lah. Sorry, apa hal tu pun content easier. Okay, here, for example, let's say your investment A, or should I put it in the box easier kan? Kadang-kadang nak kena berfikir juga apa benda ni. Okay, let's say here we have uh, Give me a minute, please. Let me insert another row. Okay. Let's say this is investment A. Next to it will be investment B. Next to it will be investment C. Let's say this will be the average return. Here will be the risk or the standard deviation. Now, okay, let's say investment A return is 10, investment B is 5, investment C will be, let's say, 15. In terms of the risk, let's say investment A is 4, 3, let's say this one is 12. Or maybe let's say you put it as 5 here. Okay, so let's say while working on some calculations later on, some exercises, perhaps you turns out to find these kinds of situation. Now, where uh, okay, all right, or rather, let us compare between two only to make it easier for you to understand. Let's just compare between two stocks, two investment, A and B, and let me try to make things more obvious by changing this. For example, this one will be 34, sorry. Okay. Now, if we compare directly, okay, if we try to compare directly between investment A and investment B here, in terms of average return, clearly investment A is higher. Okay. So we often say high return, high risk, high return. Okay. However, as we compare between investment A and B in terms of risk, we find out that actually investment B is having higher risk. So what does it mean? Is this an evidence that whatever we say, the mantra high risk, high return is wrong? High risk, high return, low risk, low return. Is that wrong? Actually, no. This is from the valuation. Valuation side tends to be more mathematics for most of the time. However, the way that you should understand the calculation, the mantra high risk, high return, low risk, low return is actually when you compare between the different types of investment. If you are comparing between stocks, for example, between stock A and stock B and stock C, you would not be able to basically demonstrate the terms high risk, high return, low risk, low return, because you are going to get into the mathematical parts, and then you will realize that sometimes things turns out to be somewhat like this. Investment B is having lesser risk, but is having higher return because you are doing a detailed analysis here and you are comparing between A and B. Okay, so it is too specific. Now, the terms high risk, high return is actually referring to this kind of situation, what we call as the categorizations of the investment based on the risk return trade-off. Now, this is more precise. In order to demonstrate your understanding on high risk, high return, low risk, low return, this is how you are supposed to explain it. Now, let's put this as expected return, this one as risk, right? And then if we will try to put all the categories of the investment in this particular line, then we will be able to come up with the idea of high risk, high return in the better way, right? For example, here the perhaps the investments with the lesser risk of all will be the US government securities or the treasury bills, because treasury bills will give you very low return, but at the same time it gives you zero risk. Remember, because treasury bills is being issued by the central bank most of the time, so basically by the government, and the government, the chances of them to default is almost none. They will not bankrupt in a way. Okay, they will have the capacity to pay you back. If they don't have the money, then they can always increase the tax, or they can do some fiscal changes to make sure that they will have the money back. Okay, so that's why the government risk, the government securities will always be having the lesser risk return trade-off. Perhaps somewhat high to have the something higher to give you higher return. Perhaps you can put your money into deposit account or certificates of deposit. Okay, but then you will also increase a little bit of your risk. More than that, if you want more than that, then you can buy bonds. Bond give you higher return as compared to T-bills, for example. but also will be attached with higher risk as compared to US government securities. Okay, as we move forwards on the line, then we will come, for example, into mutual fund. Mutual fund is, for example, will give you higher return than bonds, but at the same time, it will also give you higher risk as compared to bond. And when we go to common stock, again, higher return as compared to mutual fund, for example, but also attached with higher risk. So here, this is the correct way of using the mantra high risk, high return, low risk, low return. Then we have futures, option first and futures. And maybe nowadays we can put cryptocurrency here as well. These are things that will give you higher return, but will be attached with higher risk. Okay. Okay, so I hope this uh, will clarify things, especially for those who are asking privately to me, how do we understand the terms high risk, high return? The term is not wrong. The terms are referring to the differentiation between the types of investment here. They are not comparing between two different investments in the same category of asset. You cannot do that, basically. This one is the correct way of using the terms high risk, high return. Okay, so let me stop sharing for a while and let me try to entertain some questions before we move to the apa nama ni Bursa Marketplace. Yeah, anything? Is there anything that you want to ask? You can always ask me right now. Yeah. Okay. Okay. Thank you for those joining. We have 92 right now. Right. In the meantime, before we get to the Bursa Marketplace, we still have about 30 minutes to go. Let me share with you some trivial facts on investments and also risk and return, perhaps somewhat related. Okay, the first one, you can read this by yourself actually. Okay, individual investors are more likely to trade an S&P 500 index stock after entering announcement if the announcement was covered in the investor's local newspaper. What happened here, some people, later we will learn about this kind of technique. If you are afraid of getting losses, then you can always invest in what we call as index stocks, because it is a somewhat of a tracking. They are tracking the market movement. Okay, and what will be the strategy? It turns out that most investors, or rather retail or individual investors, tend to use, rather tend to uh, purchase the S&P 500 if these kinds of information is covered in the local newspaper as compared to the social media. Okay. Okay, we have one interesting question here by Neil Effendi. Sir, is futures Sharia compliance? Oh, good question. Yeah, right. But these are the questions that will lead to some kinds of disagreement between me, myself, and some other lecturers in the department. Right. So again, I will not prefer to define it whether it is prohibited or not in Islam. But then I can give you this kind of idea. As you will later look into futures, there are different techniques in futures trading, okay, and different types of the futures itself, the way they call it futures and forward, we have several different terminologies and definition. Okay, so if it is being regulated by the Bank Negara, and Bank Negara will normally give these kinds of license only for selected companies to operate in futures. There's a reason for that. Bank will be allowed to use future trading, for example, and some plantation and ONG company will also be allowed to have this kinds of future in order to protect for their interests, for example, not interest riba, interest for their sake, okay, for their profit, to basically to contain their profit, right? To maintain their profit and performances. So they might need to engage in future, right? But that is being done by institution, and they have a clear reasons of doing it. But if futures or options, let's focus on future. But if futures is basically done by individual investor, I tend to say that it is not very, it is at least controversial. So again, I prefer not to say whether it is halal or haram, but I can say that for individual investors, it is always better to avoid these kinds of future contract. Okay, better to avoid lah. Okay, but if you are working as the, let's say, you are working in the bank or some ONG companies or some plantation companies, due to the nature of the businesses, okay, and perhaps some of the Sharia scholar will be able to give you the direct terms. Then they will say that there is a particular needs of having these kinds of future compliance, future trading. Okay, so for individuals, I would say perhaps no particular reason of doing that. Okay, any other question before we move to Sharia? Sharia, to Bursa Marketplace. Okay, thank you for the questions. Okay. And by the way, I'm not going to discuss futures and option much in our class, particularly because we have another subject on futures, and it will be good for you if you get into that subject so that you will have two different lecturers sharing their opinions with you guys. And as a student, I think the best part of being a student is actually to be able to listen to the lecturers, not necessarily to. More than that will be better. By having this numbers of scholars discussing things with you, then it will basically give you chances to widen your perspective. Then it is very good to have that. Okay. Okay, so since no questions right now, so let me get you to the Bursa Marketplace now. Okay, just give me a moment. All right. I actually need two laptop on this one. Easier for me to contain these things. I'm trying to share with you the screen, but I'm not so sure what happened here. It suddenly stopped. Bursa Marketplace. Please do so quickly, or else you will lose the opportunity to get into the game. I set a particular time limit in terms of the date and also in terms of the participants. It also to protect you because some of your friends here virtually, some of them who are very eager to get into the game, normally they will try to open 2 or 3 accounts in the game. So I'll try to protect you guys from that kind of activity. Now, I do realize that some of you are considered to be somewhat expert in these kinds of marketplace, especially if you have in the past, maybe you have discussed this with some of your senior, and some of your senior might pass to you some trading strategies that could get you very high profit. Okay, uh, there is no limit to this game actually. I'm not going to say that you are not supposed to do that because this is just a simulation. All right. So you should not be surprised to see that some of your friends would later come out with a profit of more than I gave you 100,000. Some of them will reach 1 million. Some of them could be reaching 10 millions. Now, because to give you an idea, there is some kind of a delay in the information reports in the Bursa marketplace. So if you have another tools with you, another any kinds of apa kita panggil, assistant or platform in order to help you to get to the most recent changes of stocks prices, then you might be able to basically practice what we call as an arbitrage here, right? Let's say as we look into 7-Eleven Malaysia here right now, for example, right, the current price of 7-Eleven Malaysia is 1.340. At least slow definitely. Okay. 7-Eleven Malaysia, the current price is, hold on, it is somewhat lagging here. Okay, hold on. Must be my internet. Let me check. Download some issue here. Is for 7-Eleven, but okay, let's just while waiting, please, based on the Bursa marketplace, the current price is 1.34, right? So you realize this. To your watch list, in my list, right? And then you use another stock change price tracker. For example, you download another. I'm not going to give you the name, because once I mention the name, then suddenly everybody will download that apps, and suddenly everybody will get a very high return, very high profit from the game. But let's just consider that you download this particular apps in your phone, and from that apps you realize that the market is about to close. Let's say you realize that by 3 p.m. the price of 7-Eleven Malaysia increased to 1.40. Okay, so then if you notice that the changes will only be reflected in the Bursa marketplace with a delay of around 10 minutes or sometimes 15 or around 5 to 15 minutes, let's put it that way. So there will be a delay in the price reporting, the changes uh, from what happened in the real Bursa with the Bursa marketplace here of about 15 minutes. So if you know that the price will increase by in 50 minutes time, what you can do is simply buy 7-Eleven ratio here in a bulk. Let's say you buy 500,000 unit, and then after it increase, yeah, once it increase in the next 15 minutes, then you can always sell it back. Then suddenly you get profit. Right. Some of you are practicing that, I know. And some of you are simply looking for those penny stock, sorry, penny stock. And then you will be playing with the same penny stock and you realize there is a certain pattern of that penny stock. I also realized that. Okay. And I'm not going to say that it is wrong. You can do that. You are allowed to do that. But again, the main reason why I'm asking you to basically get into this particular assignment is to give you some ideas, exposure, and experience of dealings with stocks. And also, perhaps later you want to get engaged with real stock market, then you can always use this Musa marketplace as your perhaps as your helper in order to make decision for yourself. So leave it that way. In a way, if possible, try to play this with honesty by doing the analysis, not taking advantage from any let's say delayed or glitch from this particular Bursa marketplace. Okay, let's try to make decision and try to provide some analysis on why you choose those particular selected stocks and make decision related to whatever it is based on Bursa marketplace, not with the help of any other websites. Okay, not wrong to do that. Okay, it is not wrong, but if you take disadvantage because of the glitch, it is perhaps unfair. But if you use other information from website, you use the information, fundamental information or technical information, fair enough. But that one is not due to the glitch or not due to the delays of reporting. But if you are taking the advantage of some limitations of this Bursa marketplace game, then it is. I'm not saying that you are cheating, but perhaps you do not get, or you do not get the wisdoms of what I'm trying to share with you through this particular assignment. Okay, so now a little bit on, let's say if you go to any particular stock, you can just go to the share market and then you go to the overview. You just pick one stock. If you want to add this stock to your watch list, and it is easier to have a certain watch list, so you can just simply click on this. Right. So let's have a look in little bit on this particular company. Now, 7-Eleven Malaysia, this is the name. 5250 is the stock code. Sometimes you can simply refer the company based on the stock code. Okay, it is listed in the Bursa SEM main market. This one perhaps you can ignore this. The currency is Malaysia ringgit. Category or the industry here is a consumer non-cyclical food and drug retailing. It is being categorized under this particular group, right? The price stated here is the current price, the last recorded price transaction. Okay, if we want to be more precise. Okay, 1.34 here means the last recorded transaction of 7-Eleven was 1.34, and it has, and this price was an increase from the previous recorded price of 4.7 by 4.7%, which also means that before these recorded prices, before this recorded transaction, the original price was you minus with 0.06, so it will be 1.28. Okay. What happened here? Only when the transaction is being made, only when the transaction is being agreed, then the price will be captured here. Okay. So that will be some idea. Oh, we have a question here by Fauzan Hassani. So how to know when the counter is going to be closed? If you're talking about the market operation, then it will be closed on holiday, and if on daily basis, it will open. It will close between 12 to 2, and then after 5. So you can trade basically from 9 to 10. I also forget. I can't. You can go back to Bursa Malaysia and check. I think it is between 9 to 12:30 p.m. and then from 2 until 5 p.m. Okay, I stand corrected. I haven't checked that for such a long time. Okay, but Fauzan, thank you for the question. Right, so just discussing with you some of the points here. Okay, so days high here, 1.35, indicates to you or give you an idea of what was the highest price transaction recorded this particular day on the 25th of March. So the highest price recorded today will be 1.35. Okay, and they when they mention to you days high here, it, again, all the data here are basically talking about the data that have been, the price that have been accepted. Okay, where the transaction happened, the transaction occurred. They are not talking about any bidding or any ask price which are yet to get response from other people. Okay, so I hope you understand, when someone in real world, when you get into these kinds of activity, uh, stock trading activity, let's say you want to buy 7-Eleven, then this is the current price. You must submit a bid. Okay, this is how it looks like. The price of 7-Eleven is 1.34. You want to buy it, you must submit a bid. In a bid, refer to this one. In a bid, you will specify what will be your bidding price. And it is not a must for you to buy at the price of 1.34. It depends on laws or factor. So you might, for example, try to bid at the price of 1.33 or 1.30, whatever that you want. And then you also must specify how many units or what will be the volume that you want to purchase. Maybe you want to buy, for example, you submit a bid 1.330, volume 3,000. Okay, and then you wait. If any owner are interested in your offer, agree with your offer, then they will basically connect to you, and then there goes the transaction. The transaction will happen. Okay, that will be from the perspective of the bidder. Sometimes you submit a price 1.33. Nobody is entertaining your price because basically they feel that your offer is not good enough. So you will have to raise up your offer, redo your bidding. So instead of 1.30, you will have to increase it back to 1 point, maybe 1.40, for example. Okay, and then someone will respond to you. If people respond to you, basically through the platform, then you will get the transaction done. That will be from the perspective of bidder. The bidder, someone who basically offers to buy the stock. Asking price, or ask, the term ask here, would be from the perspective of the owner, the current owner, existing owner. They want to sell the stock. Say, let's say had enough of the stock, I want to sell it. So you in order to sell, you also will have to submit your asking price. Okay, so let's say you put the asking price is 1.34, and the volume that you have is around 1 million. So anybody who are interested to buy, they will look into your price, and then they will be basically submit to your price, agree to your price. Okay, how can we beat the prices, sir? Okay, this one is another limitation of Bursa Marketplace. I was about to get into that. The question by brother Amirul here. Okay, where is the question? Sekejap. Akan aku tunjukkan kat sini question tu. Nampak. Oh, dia lagging balik. Nyesal aku. Okay, by Amirul. Okay, previously by Fauzan Hassani, also important question. No, now let me get back. Okay, good question actually. How can we beat the prices, sir? Okay, this is also one limitation of Bursa Marketplace. In Bursa Marketplace, unfortunately, you cannot change the bid. You will have to buy and sell at the current price. So that would be the perhaps some of the limitation here. You will have to follow whatever price that they have set for you. Basically, that price is the current price lah. Okay, you cannot change it. But in real world, then depending on your broker and the platform that your broker set up for you, then you will have the option to change the bidding. Okay, unfortunately, I can open to you my broker. I'm with Kananga, for example, but I forget the password, and I am also not very comfortable to open it in front of you guys. But basically, I can change it. I will be able to enter the bid price that I want. Okay, brother Amiruddin. Unfortunately, for Bursa Marketplace, you cannot do that. This is another limitation of Bursa Marketplace. As I said, we can focus on the limitation, but I rather not to do that because I think what we can get the experience is more as compared to some limitation of the particular website here. Okay, all right, so let me continue that. So the understanding of bid and ask is very important. So everything that is has been basically shown to you here are already been captured but through the transaction. So the transaction has occurred. Okay. So the day's high is 1.35, but the 52-week high or the 1 year high is 1.43. What does it reflects to you here? Among other things, okay, some simple analysis that we can make that the price is not as good as it was in the 1 year time period. Okay, but it seems to be moving towards that. Okay, especially when you look into the day's low is 1.28. So the lowest accepted transaction today is 1.28 ringgit per unit. Which is actually closer to the 52-week low, 1.21. So you can make some kinds of analytical analysis here, okay? So you will see that in the last 1 year, the highest for 7-Eleven was 1.43. The lowest is 1.21. So if you consider the date here, the performance of 2 days, it is between 1.35 and 1.28. So I suppose it is quite close to yeah, it is actually in between because it is in between the high and low. So I might say to you this, maybe 7-Eleven will not give you a good profit in the nearest time. And remember that you only have about 2 months of playing. So make sure that you do not choose stocks that will only give you profit after 5 months or at the end of the year. You must try to get profit from the stocks in lesser than 2 months. Okay, so as we look into here, considering that the daily high and daily low is quite close with the yearly high and yearly low, there is no huge chances, not good chances. Perhaps try to avoid buying the company of 7-Eleven. Okay, at least on the Bursa Marketplace. Right? Open price here, okay, open price will be the price of the stock the first price recorded of the day. Okay, it does not follow what the previous close was, right? Previous close was 1.26. So what does it mean by previous close? Previous close is the last transaction recorded yesterday. The last transaction recorded yesterday, it was 1.26. Okay. Whereas open will be the first transaction recorded today, 1.28. Right. So again, there is no guarantee that your previous close will equals to your open today. So it is totally different thing. Bid and ask here, I suppose this is the today's bid and ask, the most common bid and ask price for today, or the current bid and ask price for today. I will have to look at their definition here. And then you have this volume. This volume here, they don't give us details here. I suppose this could be, we'll have to check, could be the daily volume or the yearly average, monthly average volume. We will have to check. We need more information here, whether it is a monthly average volume or daily volume or yearly volume. Why do we need to know about the volume? For example, let's consider that this is the daily volume. Okay, you try to compare with the yearly average volume. It turns out that their yearly average volume is 10,000, 100,000. Tiba-tiba daily volume is 392,000, which means that this on this day, today, the volume is higher than the average, much more higher than the average volume for the last 1 year. There must be something that will attract people to 7-Eleven. So this could be one of the good time to purchase the stock. So you can make an analysis based on that as well. Okay, a little bit more downwards. We can also go to this consensus target price. 1.55. What is this? Okay, consensus target price is the price that is being valued by the particular research analyst. They believe that stock 7-Eleven stock here have a potential to reach the price of 1.55. This is what we call as the intrinsic value. We will be doing the calculation of this later on. Okay, and the current differences between the consensus target price with the current price is 0.21, as you can simply minus these two. So if you believe that you believe the calculation made here, this is analysis. If you believe that you believe the analyst, then you should buy 7-Eleven, because it seems that if you buy 7-Eleven here, you can wait until it reach to 1.55 and get a profit of 0.21 in a certain time. However, this is another thing here. You must check on the consensus date. Consensus date here is 8 March 2021. Uh, I'm not so sure whether this is the date of the report or the targeted date here. I believe this is the date of the report. So this is quite new. They just prepared this report, so they expect it to reach 1.55 perhaps in a year time. So maybe not suitable for you to purchase. Right. And they put it here as outperform. I'm not so sure why they use the term outperform here. It's supposed to be underperforming. Okay, the term here, let me check again. Why do they use it as underperform? Normally, if your current price is lesser than your consensus target price, then it is outperform. Sorry, it is underperform. Underperform, underpriced. Jump, jump. Out, outperform. Oh yeah, yeah. They are using this as a comparison to the market. Outperform the market. They are trying to say here, better than the what the is it better than the market. I will have to check again on this. Okay, can someone remind me later on this one? Okay, I need to pass forward on this. So later you can also look into the alpha indicator here. Alpha indicator is especially for those who are interested in the fundamental again. They have these kinds of details on the earnings, the score. They give you the score on companies earning. Uh, what is FNT? I forget. The valuation, the risk, all these things. You can also go here and check to go to the tools and check to the stock rating here to learn more about the alpha indicator here. Right. So the company considered to be a good company fundamentally will be having an average score between 10 to between 10 and 8, neutral between 7 and 4. Lesser than that is considered to be not good. So avoid those companies. All right. So if you go into the details of the particular firm, then you will also be able to check and have a look into the chart here. This will be the chart for 7-Eleven. You can also go to their profile. Sorry about the internet connection here. Very slow. Or is it Bursa Marketplace? I do have problem with Bursa Marketplace. Lots of time have problem. Every time too, I want to log in, I also will have to wait. There seems to be some problem with uh, the profile here will give you an idea of when, yes, if you are the market player, then you will realize some people here could be of your interest. Oh, for example, let's say you just realize, oh, Mr. Y Kyong Wong is here. He is one of the most sought after CEO. So maybe he is capable of raising the performance of uh, apa nama 7-Eleven. So you want to buy the stock. So these are some of the things that you will look here. Or maybe you go retail and you realize, hey, oh, all of these most of the particular CEO and the board members are non-Muslim. I'm not very confident of that. For example, I'm not saying that you must practice the thing that I say. These are just some of the things that you can consider. Then you realize some of people, then you should also notice some of people will check the board member, and they if they notice that there is no female in the female directors, then they will not purchase the company. Those feminists can. Yeah, we are with the woman. Feminist, Wonder Woman, anything. Okay, and then you can also go to the analyst consensus, see in details, or the research. Research will be some news related to the company. You can always basically venture into the games and get more information about this. Okay, this will be more information. I hope you can get it. Wow, very slow lah. Right. What I can give to you in general that is that you will have to basically get into the game and venture into basically all the tools here, all the share markets things here, and then you will get more information about the game. You will be having more information, and in fact, it will also help you if you want once you decided to apa nama, get into the real investment later on. Okay, so this is the target price. They do not mention the date again. We have six estimates. So six companies, six estimate here means six companies are saying basically providing reports on the company on the 7-Eleven. From the six company, one of them is suggesting you to buy, strongly buy. Four of them suggest you to buy, and two of the analysts suggest you to hold the stock. In fact, this is almost the similar traits from the last 3 months. Okay, and all right. So if we try to relate this again, uh, as on average, the target price is 1.54. It's been shown above here as well, 1.5455. And the current price is 1.34. So it is actually good to buy the stock if you intend to hold it for a future time being, for larger future or longer horizon. But if you for the space for the purpose of the game, perhaps it is not the best of option because you must wait for several times. Uh, if only we can read the date, it will be easier. Okay. They do not provide us the date of their prediction of when this price will be realized. If we can have that, then it will be easier for you to basically estimate whether you should buy or should not buy the stock. Okay, right? So I'm going back to this point place here just now. So lots of students, lots of your friends are asking me about this. Um, I will not be able to capture everything here, and if you ask me about this strategy, then oh wow, there's a lot of strategy that can be practiced. But my opinion here is that you must come up with your own understanding of the market first. If you want me to describe this one by one to you, we would not have enough time. And which strategy would be the best, if you ask me, then it depends on your intention as well. It depends on your style as well. And also depend on how many hours per day you are willing to spend on looking into this game. Right. Okay, this is the today's market action. I just click on the share market just now to have an overview on the market. You can have a look as well. The volume today is the volume transacted today, recorded today is already what is this? 3404 million, right? Number of stocks being traded today. And so far we have 1356 counters traded. But still the market is considered relatively low. Okay, it is yet not normally it is like that. It will only get to be to get to this line or this bar after lunch hour. Okay, market is normally slow in the morning. It should also give you some idea. If you want to buy the stock, it is always better to buy it earlier as compared to the later of the day. Buy earlier today, sell during afternoon session. Buy in the morning session, sell in the afternoon session. There could be one of the strategy, but that will be very subjective, unfortunately. Okay, you can also get some trading ideas here from the market. They are suggesting to buy, for example, Freezer, KM Long, Usma, Agenta, all of these. But again, try to relate this with your game, with our game, and you must realize that our game will end in 2 months' time. Make sure that these particular stocks will be able to get to their consensus price in 2 months' time, or else you will not get the profit. Right? Some of these are just details related to market. You can skip that. I normally will make decision based on the top five gainers here. Right. This is the daily top five gainers here. So I will normally make decision based on this. Can also have that. Doesn't mean that you will have to follow me. This will be the top five gainers in terms of warrants. Okay. You can also use if you have no idea at all, you can always go for this screener. This will be the most easiest technique, I suppose. You go to the screener, what you would like to screen, of course, stock. You go for the analyst recommendation to buy. For the time being, there will be about 39 companies suggested for you to buy. So let's have a look into those companies. You click on the show result here, then they will provide you. These are the company with the buy recommendation. So I'm not saying that you are supposed to add this to your portfolio. Maybe you want to add this company to the watch list. Click at the high icon there, add this to your watch list. So later you make decision based on that. Okay, there's a lot of things that can be discussed and can be studied here. And I even myself I am not, they keep on changing the Bursa marketplace features, so I am also not very well with some of the new features here, whereby they ask you to play some games and give you some points. I never did that. All right, so before we end, maybe if you there is any more questions, I will stop sharing this thing because it is taking my internet as well. Mhm. Okay, anything? Any questions before we end the session? In the meantime, I'm still waiting for the comment. Oh, let me check WhatsApp. I forget to check the WhatsApp. Oh, nothing from WhatsApp so far. All right. Okay, so let me share with you this one as well. Okay, some interesting fact as well. Investors are more likely to increase their trade size after a successful trade and more likely to decrease trade size or quit trading after unsuccessful trade. So try to compare this with yourself. This is one of the what we call as the bias. Did you, after you managed to get a successful trade, did you increase your trading size? If so, be careful. Or did you decrease or quit trading or decided not to open the apps after for a few days after you have an unsuccessful trade? If so, be careful as well. Okay, try to avoid these kinds of biases. Okay. All right. Another question from Sister Fatin here. Do we need to buy stocks from different category? I would suggest you to do that because later you will provide me a report, and in that report, I would like to know the name of the stocks that you buy and also from which industry. And of course, I would like to know as well why do you purchase those stocks. Okay, Mr. Patin, thank you. one last question, perhaps. Oh, maybe next time I can invite some of you to join me live here, right? Maybe I can appoint one from each section to join me so that we will have more interaction here. Okay, asalkan jangan korang mengarut pula dah lah. Sounds like a good idea, kan? Okay. Okay, so let me buy you another 2 minutes before we end the session. Right. If you still have questions, you can type it here, or maybe you can ask me in the class, in the WhatsApp later on. In the meantime, I am currently preparing you the assignment details for the Excel. I remember that you guys have formed your own groups. Okay, so make sure you are ready with your group members. I'm about to release the details for the task or the assignments for you to work on as a group. Okay, top leader. Nanti kita cari. We will look for those suitable candidates to appear on online with me. I will share you the link, and maybe you can join me in the live stream as well, kan? Okay, so that's it for today. Thank you for joining me. Sorry for any the connection issue that I had earlier. You can always revisit this and re-listen to the discussion or the explanation in the YouTube. I forget to attach. I will later attach you the link of YouTube in the Google Classroom as well. Okay, so that's it for today. Thank you, everybody. We'll meet again, inshallah, next week. In the meantime, please keep on doing the exercises on the list. Okay, thank you. Assalamualaikum warahmatullahi wabarakatuh.